Hi everyone, good morning. Let's just give it one more minute, just checking that you can hear me and see the screen. Screen, I should say. Yep, thanks Gordon, Jackie. Thank you. Thank you, John. Thank you, Florin. Right, let's get going. Yeah, interesting moves on the market. Really strong turnaround on the yen. What we had on Thursday was that that ECB meeting just started off a bit of a chain of events that actually sort of has turned markets into a little bit more of a choppy phase, really. The euro was talked down like brilliantly by Mario Draghi. I mean, like considering the change that the ECB made to its statement, Mario Draghi was absolutely fantastic at his job, which is to try and keep the euro down. And subsequently, the euro fell quite sharply. And it sort of remained around that sort of level. It's sort of consolidated since then. But I think a correction's on the euro, a chance to buy. That's one factor I'm going to talk about today. Another one is the fact that the yen has really significantly sort of shifted its sentiment. Previously, the yen had been consistently bought into, say, for example, dollar yen tracking consistently lower. Now you've seen a turnaround on that, and that's happened as the sort of severity, I would say, of Donald Trump's trade tariffs have been sort of reduced with all these exemptions across the board, and also the fact that the market is also seeing a more risk positive environment generally, driven by not only the decision or the apparent meeting that we're going to see between North Korea and the US, but also non-farm payrolls on Friday were interesting because we saw average hourly earnings disappoint. Now, average hourly earnings disappointing is not in itself an explicit sort of reason to sell the dollar, but it sort of limits the number of rate hikes. I think if we're going to continue to see average hourly earnings sort of fluctuating around and not really picking up in a sustainable way, I think that we're going to see we're going to see sort of risk appetite being maintained because the markets do not want to see inflation picking up, and they do not want to see the Fed going more aggressive in its rate hikes. And if that is the case, then we're going to see volatility starting to fall back, and I think that there is generally a sort of trend of that. We can see that in the VIX. VIX has been sort of tracking lower and unwinding the moves, and that's allowed equity markets to sort of regain their upside initiative. Look at Wall Street, the S&P 500, back above its February high yesterday, although it didn't close above that. It still sort of made it on an intraday basis, which suggests that the impetus is there for that move. Now, inflation this afternoon is really important for the US. I think CPI, the market sees this as the sort of the main data point for the week. You've got retail sales, I think it's tomorrow, but let me just check. Yes, retail sales Wednesday. But inflation for the CPI is really important for the States. And I think that if we see the core data, which I will show you, my economic calendar, where it is economic calendar, this is core data is expected at 1.8%. Now, interestingly, that we're going to see potentially the headline picking up to 2.2%, but the market is not overly that interested in the headline, because the core, I think, is far more important. Now, that is expected to stay flat at 1.8%. Now, if that is the case, which is here, you've still not really seen a pickup in inflation for almost a year. Well, actually since the beginning of 2017, when inflation started falling back. Not really seen inflation just sort of significantly picking up in well over a year. So subsequently, that would again question whether the Fed is going to be sort of pushed into sort of making 4 rate hikes. I think 3 this year is pretty much nailed on, unless you get stronger data. And if you get stronger data, you could sort of push out to 4. But that's likely to still see, I think, the dollar under pressure. Now, I think what we have seen is with the dollar, going back on my dollar chart, is that in the last sort of few weeks, the market fluctuating around. However, bigger picture for the dollar is still very negative, big downtrend, and you can see that. Sorry, I've got all these labels on here for these Fed meetings. But the big breakdown below 91 means that is a massive overhead resistance now. And given the fact that you got that downtrend that comes in as well, I think any rally sort of 90.5 towards 91 is a selling opportunity on the dollar. I think there are some significant long-term factors which would suggest the dollar is going to remain under pressure. The twin deficit is worsening, for example. That is the main one that the market is looking out for. But also, if these trade tariffs are managed, I say managed, if these trade tariffs are done in a chaotic way, which anything's possible with Donald Trump, then I think you're going to see the dollar under pressure ongoing this year, and subsequently I think we're going to see the dollar selling off. So I think that is going to continue. Now, I said the yen is suddenly a big underperformer in my potential. Oh yeah, sorry, just down here. Be careful with dollar trades in front of CPI. So putting on new dollar positions or running dollar positions in front of CPI could be a risk. Now, CPI, as I said, is not expected to contain any real surprises. However, if there is an upside surprise, then you're likely to see quite a sharp dollar rally near term. I reckon it would fade and be sold into, similar to the one we saw in February. Where's that chart again? A dollar. So we saw the one in February on that sharp payrolls average hourly earnings gain. It got sold into, but I think that would be sold into again. You're also likely to see yields strongly higher as well. 2.95 was the 10-year yield. That's likely to be beaten if we see a significant upside surprise in core CPI. Again, not expected by the market, and the market is fairly settled in front of this, but I think we're going to get some direction off. Once we get inflation out of the way, I think the dollar's going to start to come back under pressure again, and you can argue that that comes about through the improved risk appetite, which would be positive for currencies such as the Aussie and the Kiwi, which have been performing much better. But also, I think the euro is a buying opportunity, this correction on the euro. Now, let me take you through some of these sort of potential trades that I've got here. Aussie yen. Now, this is a classic market risk on, risk off trade. So when you got risk off, market falls away. What was risk off? February, wasn't it? It was massively sort of high volatility, markets sort of being sharply lower. However, you've seen a big turnaround, and that's been driven primarily by yen weakness in the last couple of days, but also the Aussie strength. Aussie is getting stronger. Look at the Aussie against the dollar. Aussie breaking that downtrend against the dollar, just consolidating a touch, but if it breaks up above 78.95, the Aussie is up and away, because that is a key reaction high that would have then been broken within that trend lower. But in terms of Aussie yen, I think that this is, in the last few minutes, it's breaking above 84.40, which is a long-term sort of level that the market would have been looking at, and it's building this uptrend. I think any sort of weakness within this uptrend, I think, is a chance to buy. Therefore, look at these momentum indicators. MACD lines buy signal, accelerating high in the stochastics and the RSI above 50. This is looking pretty strong now on Aussie yen, and what you do tend to see is the market trending. And you do tend to see that on a lot of yen trades, I would add. The market trends a lot with the yen. So when you get a strong trend, you do get the market moving. When you get the market sort of picking a direction, it does tend to trend in one direction, as we saw in December and January, rolled over in February sharply to the downside. Is it now beginning to build a new uptrend as risk appetite in the market is improving? I would say it looks to be doing so. A breakout above 84.85, which was that reaction high from late Feb, would certainly be sort of confirmation of that move higher. So I'd be looking to buy the Aussie yen. Now, levels, I mean, it's difficult to say because the market has sort of got away from this uptrend. I mean, you could buy it and then it could pull back to the uptrend, still be an uptrend, still be positive, still be looking towards the recovery, but you'd be chinged out of a trade, especially if you had your, because you'd naturally probably put your stop under the lows of the last couple of days, 83.60. So I would say anything around 84 figure. What's as a yen? I mean, here's that uptrend. 84 figure is an old sort of pivot area, old support, basis of resistance, and it had been resistance, so it becomes supportive. I think 84 figure is a buying opportunity on the Aussie yen. So where is it? I think. Okay, so we're going to go one mini lot. I'm going to put a pending order buy limit at 84, and I'm going to have a stop loss. What would that be? Currently 83.30 on that hourly chart uptrend. That uptrend. I mean 83. I mean I think 83 sort of 45, and that would be a little bit of room under 83.50. I mean that would be under the lows of the last couple of days, and that uptrend is quickly going to move. So I think I'd be happy with 83.45. And yeah, so we'll do that, and we'll go buy limit, bang, 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 place. The other one I like is the Euro CAD. Now I did this before, and it worked really well. Euro CAD, and accelerated higher, and I think you've seen that corrective move as the CAD strengthened in the last few days. But that CAD strengthening seems to have run out of steam a little bit. Look at the dollar CAD. Back towards that uptrend. It's unwound towards that uptrend, but now starting to find support. Now, the only caveat I would say to that is these MACD lines. Stochastics are still falling. You wouldn't ideally see the stochastics rolling as a bottom, but the RSI back to 60 on the dollar CAD. But Euro CAD, considering I'm sort of thinking this is a buying opportunity on the euro, back towards that uptrend channel support, which is a positive, and building support there. 57.60 is that reaction low. You started to see the market just sort of unwinding on that RSI back to 60, finding support. MACD lines coming together. I wouldn't say that's a sell signal yet. And I think that there is a bottoming, as I said, on dollar CAD. I'm looking for a bottoming on the stochastics. Is that a bottoming? Possibly so. So you'd be looking out for Euro CAD as well. I think Euro is coming back to levels actually across lots of these markets. Let's look at Euro Aussie. Is the Euro Aussie going to start to form support? 56 area. I mean, I talked about 58 before, and that was before it had a sharp move to the downside on Friday. But yeah, we're starting to see support around 56 now. If that continues to build, I think that's a buying opportunity on Euro Aussie. Euro Kiwi is also back to an interesting long-term level. Uptrend on Euro Kiwi. Does that now start to form support? And yeah, this is Euro Yen on the brink of a breakout. It certainly seems to be breaking out, actually. I mean, 32 figure previously was a resistance, big resistance area, actually. But now with the turnaround in the yen, we're starting to see the euro yen rallying higher. Again, I think the euro is starting to sort of find a bit of support. I think trading the euro, it may be a bit tricky in front of the inflation data for the US today, because it's going to have a big read through on euro dollar. And euro dollar is basically in the middle of a range now. Euro dollar bang in the middle of a range, 121.55 up towards 25.55, so 400 pip of range. And where are we? Pretty much bang in the middle of that now. So I've just had a few comments I've not really been reading. Yen. Comments on the yen. Euro fall from John. My guess by late Wednesday. I think euro, euro dollar, I think is a fantastic buying opportunity between 21 figure, 22 area. I think that is your range on euro dollar. I think that's a long-term support. Look at that uptrend on euro dollar, really good uptrend. You got the breakouts of 2090 and the support at 21.55. And the lows, sort of the old lows, coming in around that 22 figure. So I think between 21 figure, 22 figure, euro is a really good buying opportunity. I mean, it has sort of stabilized in the last couple of days, which sort of leads me to wonder whether it is a buying opportunity now, because you've also got the MACD lines sort of bottoming out on a medium-term basis, although near-term flattening, suggesting that the market is waiting for inflation. Once inflation is out of the way, you might well get some direction more on the euro. Lots of comments from John, as ever. Euro Aussie, once it breaks 56. CAD weak, you've gone with Euro CAD. Do you see euro as the strongest currency at the moment? Not entirely the strongest. Because you are actually seeing, as I said, at the moment, a battle between euro and Aussie. Aussie has been much more stronger than euro, pulling euro Aussie down. But if the euro Aussie starts to find support, then yeah, that could well be the sort of euro finding that support again. I think longer term euro, I really like the euro. I think there is more upside. I think fair value on the euro is a lot higher. So it's 26, 28 area. On euro dollar from what I believe. So yeah, I think could be more. So yeah, lots going on in these markets, but I think inflation could be key. Now I've got sterling Aussie as well. So sterling Aussie on a break. I sort of looked at sterling Aussie in my chart analysis videos, and you've sort of got this broken up trend. Basically, sterling Aussie sort of on a longer term basis, sort of get that, stick that trend in. I think it could be ready. It could be about to come under pressure, because if the Aussie does start to sort of outperform, and it's been performing pretty well recently, sterling Aussie, but it looks as though it could be on the brink of sort of deteriorating. Where is that? That is there. Could be on the brink, and that support at 75.70 it is key on a near-term basis on that support for a top pattern, but also around those moving averages, and also that uptrend, that long-term uptrend. So it's going to be a really key support to test. If that breaks to the downside, that completes a top pattern, implies I think 340 pips of downside, and again you're sort of back towards this key support of January. So you could be on the brink of a really significant corrective move on that sterling Aussie, so watch out for that. Below 75.70, if it breaks below that on a closing basis, God, dear, I wish I could speak properly. If it breaks below that on a closing basis, I think that's going to be going lower. So that's another one to look out for. So yeah, there's a lot of possibilities. I think inflation is going to create volatility today, so watch out for that across all the dollar pairs. I haven't even spoken about gold. Gold is another one. Gold could come under real pressure. I mean, it has been ranging, but there's more of a sort of corrective move now within the range, sort of failing at 1341, sort of pulling back below 1320 on a consistent basis on across the last few days. It has been bought into below 1320, but the pressure is growing to the downside. If inflation sort of ticks higher in the States, you're going to see, I think, that 1300 level coming under pressure, and that would be a significant break. That's your long-term pivot that I've been talking about on gold for ages. So yeah, 1300 if you see an upside surprise, but gold is sort of coming under a bit more pressure. It's also under pressure from that improved risk appetite aspect as well. So yeah, generally speaking, the market risk sentiment seems to have turned around. So take that into consideration when you're looking at your Aussie, which is a higher risk currency, being sort of a higher exchange rate currency, in you considering the yen weakness, considering the gold weakness. Market risk appetite is really important to all these things. So yeah, we need to consider that. So I've talked a lot today, and given hopefully some of my thoughts on what could be happening. But inflation, watch out for that data in 12:30. That's what, an hour and 10 minutes. So yeah, that could be a big factor in the days ahead. So yes, I hope you've got all of that, because I have been going quite quickly. And yeah, with that in mind, I wish you good luck in your trading, and I will speak to you next time.